Traders, Jamie Saettele here. It is May 7th, 2021, and welcome to the FX Power Hour. We'll be looking, as always, at some majors, a few crosses that may be interesting, non-dollar crosses, major commodities, maybe some indices, and of course, ask questions. If you want, you can ask them throughout the webinar, and I will do my best to answer them. All right, so let's take a look here first. At US dollar, not going to lie, I was a bit surprised by today's move lower. Look, irrespective of the jobs report, as you know, I look at things from a technical lens. There's several reasons why I don't pay a whole lot of attention to, to the economic indicators that come out and the knee-jerk reactions. The trends in them is one thing, but when you've got, I've seen a million times strong, supposedly strong jobs numbers, or economic reports sends the dollar in the opposite direction than you would think, and vice versa. Today, obviously, was not one of those times where we did have a big drop in the dollar and a weaker than expected report. In any case, I was looking for, a stronger dollar this week after we had found support at the 618 retrace last week, and then had some good follow through on the upside, right? So obviously that's not the case. So kind of back to the drawing board for me. So really the next level that I'm paying attention to, again, barring some sort of a reversal after today's dump lower, is going to be the close of 225, and that is 11,636. So it's also close to the 786 retracement, which is the next Fibonacci level. And again, I like to kind of step back and take a bigger picture look. Let's not forget that we are at a gigantic support level, chart level, if you will. So we also had actually last week an interesting buy signal from a DeMark sequential buy. Okay, if you're familiar with that at all. So that was like the third one, I think, in the history of this index, which goes back to 2011. I was actually one of the guys that helped develop this index, actually, at FXCM back in the day. So yeah, looking for support now at that level, probably again 11,636. And that's all I'm really going to talk about with respect to this index. Also, just real quick, I know that we've talked about or addressed the median line, in recent weeks since really I've been doing these Power Hour webinars. And you can see again that the median line was very important in, identifying a level. So, we traded up to it. I guess that was the 30th, so that would have been like last Friday, yes. And we traded around it really every day until today when we fell off of a cliff. So, as we got up to that level, it was kind of like we're not good, as far as dollar strength until we clear this level, and obviously we did not do that. Okay, so that is US dollar look. Okay, DXY, which again, essentially euro flipped. We are actually getting into a pretty interesting spot for dollar. So you've got the trend line here. Let's see where we close today. The day's essentially over, right? I mean, Europe's closed, so we may, just be around here. But weekly chart, this bold line, you're like, where the hell is this bold line coming from? It is weekly reversal support. So again, the close of the low week, which, by the way, and this is important, we made the low so far for the year. I'm actually going to bring up a different chart. And the dollar is just getting destroyed today. I'm going to go off script a little bit here and just look at something I want to talk about here. Okay, so let's go to DXY. We're going to talk about the importance of yearly openings, and it applies right here in DXY because we are nearing the yearly opening price, right, at 89.94. The low so far for 2021 is January 6th, all right, third trading day of the year. So that's important in and of itself because you tend to get the January effect, right? People talk about it in equities all the time. I'm going to talk about it from the standpoint of the distribution of highs and lows over the course of a year in FX, especially the euro. I don't have the stats in front of me, but if you were to look at, going back, let's go to since inception of the euro, like 98, 99, the distribution of highs and lows for the entire year overwhelmingly occurs in January. And if you get a low in January, you tend to have a high in December. In other words, January sets the tone for the trend, if that makes sense. So far we have the high in March and the low in January. So does that mean that, is this deterministic? Does that mean that the low is going to hold? Not necessarily. However, we are coming into the yearly opening price, right? And we want to pay attention to that level at 89.94 because it tends to act sometimes as a pivot, right? The best example I can give for that is probably the Aussie dollar rate over, here's like recent years Aussie dollar, okay? Let's go back to even, here's like 2014, right? You can see here the magenta line, break down below it, it's then resistance. Here's 2015, tank, came back to it, resistance, tank, right? Jackalus says, holy smokes, fancy seeing you here, Mr. Saettele. Well, thank you. I'm not sure who Jackalus is, but nice to see you as well. Here's some more examples. This could be kind of like where we are with the dollar right now, right? 2015 Aussie tank, come back, tag it, continue in the direction lower, right, after making that high in January. 2018, right? 2019, right? 2020, here was 2020, came back, resistance, pulled back, broke through, came back, it was then support again. And then this is where we are in 2021 Aussie. But yeah, with DXY, let's just pay attention to 89.94. Obviously, euro. You know me as Josh's little brother. What's going on? How you doing? All right, so yeah, so here we go. So euro dollar, we're going to look at 22.16 as the yearly opening price on that. So I'll have more out next week in terms of what to pay attention to with respect to these yearly opening prices and other measurements around there. But yeah, it is a setup that we're coming into here in the second quarter. Where you're going to want to pay attention to markets that are coming into the yearly open after you had trended in one direction, because sometimes that can act as a level for continuation in the direction that we were already going. All right. So quickly, let's move back to these charts. All right, so 89.6294 is the DXY level that you're going to want to pay attention to. Let's go to euro. Okay, so euro, we noted 22.16 as a level. Here we are breaking above. And again, if I go back, again, the confusion with which, this move, kind of occurred here, that we late last week, we traded up through this resistance line, pulled back sharply, right? Counting this as an impulse or not, wasn't sure. However, this to me looked like an A wave down, a little B wave up, and then ready for another pullback. And then we could do this move higher. It's not what happened. Now we've broken through this. So, you know, back to the drawing board as mentioned, and we're probably looking for something up near 22.16-ish, which again, yearly opening price. The center line of the channel, back to the March 2020 low, is going to be a little bit higher, say 22.50. So, you know, maybe 100 more pips on the upside before you'd think about, you know, resistance in euro. Now, from a bigger picture standpoint, look, we had a year-long uptrend, or 10 months, I guess, March 2020 to January 2021. And then we get a pullback that lasted 3 months. Okay. You know, markets correct themselves not just in terms of price, but also in time. So, you know, with that said, my thinking here is that, and has been, and it, you know, it may be wrong. Time will tell. However, my thinking is that we have more sideways action that needs to occur before another leg up can take place in euro, and another big leg down can take place in the dollar. Okay. MS Ransor asks on your euro chart, you noted peaks in the channel with numbers. Can you explain that a bit more? Yeah, I will do that in a second. This is exactly, this actually applies to what I'm talking about right now. So the numbers you see here are Elliott wave labels. You know, simply Elliott wave describes markets move in series of 3s and 5s, moves with the trend, or a series of 5 waves, 3 of which, you know, affect the trend. 1, 2, 3, 4, 5. Markets correct in 3 waves like this. You can see here 3 waves. But 3 months time is typically not enough to correct 10 months time. That doesn't say that it didn't, right? I'm just leaning towards the idea that maybe we have more sideways action to unfold. So, you know, you have, you know, more what are known as complex corrections, excuse me. Here's an example. A flat correction, for example, commonly occurs like this. Oops. Where you get a 3 waves down, a 3 waves up, you might take out the high, and then you have another 5 wave down move. So it might look like this. So this could be something that's going on here. If that's the case, and we don't know it, but if that's the case, then we could come up here, take out the high, and then turn lower. All right. Again, this is all conjecture at this point, and it's frankly, it's not all that. People will probably argue with me on this, but it's not all that applicable to, you know, risk management and trading. In my opinion, it's more of a analysis tool, and analysis and trading are quite different. However, it does give you a context to work with. Okay. There are times when the analysis and the levels will line up, and that's when you want to, you know, put on a good position. So as it is now, from a trading standpoint, I'm looking at 122.16, 122.50 as a level. If I get some evidence around there that the market is reversing, then I will put on a trade to short euro and, you know, go from there. However, I'm aware, given the Elliott wave context, that we could go take out these highs, but it still may simply be within the confines of a larger correction. So I hope all of that makes sense. Okay, someone's talking about dollar CAD. We will get to that. All right, so here is euro again. Next level to pay attention to 22.16, 122.50. Here is British pounds. 618. Retrace just about there. It does look pretty bullish, doesn't it, with this kind of base here? One thing that I do want to address is this. So seasonal studies, all right? So here's a histogram, right, of 30 years, 20 years, 10 years, 5 years. May is typically one of the most reliable months for dollar strength. All right, obviously that's not what's happening this May, but I don't like trading against a strong seasonal backdrop. So it's very difficult for me to want to chase dollar weakness here. If that's wrong, so be it. But, you know, it's just kind of how I operate. So like this is cable. You can see you tend to have a weak cable throughout most of May. So with that said, here we are coming into a pretty big spot early next week in cable. Again, the 618 retrace is also the high from March 4th, and that's going to be, what is that, just a bit above 140. And then you have the center line of the shift fork right here, which is going to be about 140.70. So again, makes some sense with respect to dollar index and euro, where we have a little bit more, you know, dollar weakness before we get to a level that you'd consider, you know, fade worthy, if you will. And the same can be said for British pound. All right. Dollar yen. This has actually been one we've actually been on, if you will, this week. So aside from, you know, the kind of thinking dollar upside this week, which proved to be completely wrong, which is fine. Risk management is the most important, because you're not going to get it right all the time, maybe not even half the time, maybe only like a third or a fourth the time, but that's the name of the game if you want to make money. And trading is risk management. All right, so the channel here has just been, you know, what to trade. Short the red line, buy the blue line, right? So yeah, that's it. So we hit support today, 618 retrace here on dollar yen. Frankly, I'd be looking higher here now in dollar yen. If we break here, then this blue line would become resistance for another leg lower. So a break, you know, here's a short setup. Here's a short setup looks like this. You break, and you come back, and then you short here, right? Until you break, your focus is higher, all right, against the low here this morning, the NFP low. And that is that. The next upside level is probably like 110.20, which is a 786 retrace, okay? It's also the trend line, or channel line, I should say, from the 2018 high, all right? Okay, Aussie dollar. Big level for Aussie. Let's look at a 4-hour chart. So here you go, 4-hour chart. We took out this high from March. We're trading at the best level since February, when we were just off the highs. The bold line here, that's daily reversal resistance. Again, that's the high here from February 25th. That's 78.71. That is a level to pay attention to. This could be 5 up here. 1, 2, 3, big drawn out 4 and then 5. Although if I'm getting nitty gritty on this, you may need a little bit more, you know, what I call back and fill. In other words, pull back, rally in order to complete that 5 up. Another way, of course, to try to estimate the high is a channel. And if we do that, we got to throw a parallel up here. 37, that's 38, okay, 38. So that would be that up here, which is a little bit higher. So, you know, if I'm giving you a level to pay attention to in Aussie, it'll be 78.7 to probably 79.10 or so. Kiwi. Same deal for Kiwi. We are looking probably towards the top of the channel. You can see we've gone through the 618. The next level to pay attention to in Kiwi is going to be, you've got daily reversal resistance up here. Again, that's the close of the high day from February. 786 retrace as well. So that range spans 73.50, 73.70. And you can see how here, just how great this channel has been. Here's an hourly chart. We actually shorted up here, and we did take profit down here. However, if I were smarter, I would have flipped long here, and instead I waited and did nothing. And now we have come all the way back to the highs. So yeah, got a little bit hung up on a, you know, kind of a bigger dollar move to the upside, but you know, there was reason to suspect as much. Again, one of them was the seasonality, the seasonal tendencies, which have clearly not played out at this point. But yeah, as it is now, pay attention to 73.50, 70 for Kiwi. Pardon while I take a sip of my coffee here. All right. Okay, getting to dollar CAD. And we did have, was it nicer? NISER 2009 asked about dollar CAD. Yeah, so we obviously have a huge break here. Okay. I was looking for a hold at 22.50 in dollar CAD. We've overshot that. There were several reasons. One was we had a center line or a median line from a structure that goes back to the 2016 high. Okay. Second reason was the center line from the 2011 channel intersect the same place. That was also the 2018 low. And I wrote about this on Wednesday. You can see right here, when these levels intersect, you get what's called a energy point in slope analysis. Well, we certainly, energy points, you tend to have a big volatile move. We certainly had a big volatile move. It was just the opposite of what I thought. I thought we were going to reverse off it, and we tanked. We did not get a buy signal. We were just at a level where I thought we were going to, you know, come off of, and that's important. It's important to have signals for entries rather than just what you think, right? So like I take a two-pronged approach, right? I have the analysis and what I think, but that doesn't really mean anything unless I have a signal. Once I have a signal, then I can act on it. So you need a signal at the level where, based on your analysis, that's how I go. And we never got it. But as it is now, look, we're still at a spot here. You've got 120.60, which is the 2017 low. I'll be interested to see volume stuff over the next couple of sessions. Like, for example, dollar CAD is actually sporting a doji here today. Okay. There are some other CAD crosses that are interesting to take a look at. like CAD yen, which we'll look at here in just a second. Let's see where the volume is on futures today. It's actually not that high. We could get a 4-hour volume reversal in 30 minutes, but frankly, with a big move like this, I'd rather see a daily or something like that to act on, and we don't have that right now. Hold on 1 second. We could get an ETF or a signal ETFs, which, by the way, are amazing. I don't know if I've really shown some of the signals with the currency ETFs, but you know what? We'll just wait and see. Once we get some, then I will be able to show them to you. MZ Hansor asks, what signal entry strategies do you use? So a lot of them are based off of volume on futures, and then I apply that to spot currency. That's really the main signal. So yeah, if you know, I write the analysis obviously, but if the actual signals and entry stuff, I will post, you know, at sbtradedesk.com. Okay. All right. So moving on, I wanted to take a look at some crosses I mentioned, right? So we talked a lot about euro yen the last couple of weeks. I did put on a short last week, and I actually got stopped out today at break even. Here's the euro yen chart that we looked at last week, right? Here's a daily chart. We shorted up here, and I was looking for down here before taking something off, and we were stopped at a break even. So back to the drawing board on euro yen. CAD yen is a very interesting chart. Here is, we're going to go to a weekly chart. All right, this is all the way back to 2007. Okay, CAD yen, this is a log chart. I look at, I've had this question before, but I look at log scale most of the time. You know, you're looking at percentage changes over very large periods of time and periods of price, and you need to compare apples to apples, right? So if you look at log scale, really the top of the zone is like 91, let's call it 9170. 9160, 9170. If you're looking at arithmetic scale, we're kind of at the trend line now. I much prefer looking at this log scale chart. However, given you know what I said, percentage moves are more important over the long scale, over the long period of time and price, and you have an intersection with the new center line here. So that might be the big spot to pay attention to with CAD yen. Might be like that 9160, 70 area. That's kind of where my head's at. All right. Aussie yen. We're finally going to try to go for it up here. Looks like it. Again, this is the underside of the line from the financial crisis low in 2008. And that's going to be all the way up now at about 86.60. So it does look like we're going to go for, excuse me, a little bit longer on the upside with these with the risk on, so to speak, before we have the potential for something more serious on the downside in terms of a reversal. Okay. All right. Just a good time for me to let you know in case this is your first time here or you're unaware. So I'm working as Chief Technical Strategist for Scandinavian Capital Markets, based in Stockholm, Sweden. And we are looking for profitable money managers to join our ranks. We've got clients all over the world that are looking for more strategies to invest in. So if you are a profitable trader and you would like to venture into the money manager world, we can fund your strategies with up to $2 million. So come show us what you've got. To register, go to scandinavianmarkets.com/fundmytrades. Again, that is scandinavianmarkets.com/fundmytrades. Okay, let's move on to some commodity stuff here. Here's a real quick, there's that Aussie yen chart. Intersection with former lows in 2013, actually. It's going to be like 86.40. So, yeah, getting close. Be a couple more updates, and then start paying attention. Okay, so silver is actually the one that I'm following the closest up here. You can see the this is a chart that was in last night's post. We nailed that 618 retrace, didn't we? Look at that. Very close. Oh, I guess a couple ticks short. But well-defined chart level up here. We are getting a reaction. So let's see, actually, so this is a good example of what I'm talking about. Let's see if we have any sort of, and it looks like we do, actually. Any sort of volume, action signals, what have you. All right. Okay, so we do. So we've got a volume reversal signal up here in silver. This is actually the silver ETF, but you know, you can see kind of how I go about things with the analysis level. So it's not just having the signal. First, you have to have the level and the analysis, and then if you get a signal, you can take action. So yeah, you know, near-term contrarian stance on silver right here. It's not the dumbest thing in the world, in my opinion. All right, so there we have that. Silver. Copper just reached a record, by the way. And this thing just will never go down. Here we go. So here was the record high from 2011. Imagine this. You don't have to imagine it. You can, it's just actually what's happened. But we were at a 4-year low a little over a year ago in copper. In fact, we were almost at an 11-year low in copper. Fast forward 1 year, a little over 1 year, and we're at an all-time high in copper. That happened fast. So yeah, here we are in copper. I've been, again, once we traded up, excuse me, once we traded up into, I gotta drink more coffee. Once we traded up into this level in February and pulled back sharply, had a big reversal signal. I figured we were going to pull back for a little bit longer, but that has not been the case. The reversals have been, short-lived, if you will. So yeah, at this point, it's just be careful when it comes to copper. This is kind of a runaway market and one that I'm fairly uncomfortable in, but you have, have a robust risk management system in place if you are trying to catch this. But the market is awfully emotional up here, and you're going to be subject to strong reactions, in my opinion. So we'll see. All right, so there is copper. Crude oil. Crude oil actually continues to trade kind of in a bearish manner from my standpoint. You've got the 5 waves down here from the March high. From the March low, you've got a wedge, and earlier this week we kind of had a little overthrow or a thrust higher and a sharp reversal to the downside, and we're still within this wedge, but the lower wedge barrier is going to be like 63.40 or so. That needs to break if crude is going to have another leg down. So pay attention to that. 63.40, big spot for crude. Here is gold. We did a lot of gold stuff last week, actually. 1880 or 1830, excuse me, you can see was a level we were looking at. We reached that today. There's still no reason to fade this at this point. The big level for gold is a little bit higher, and that's going to be like 1860. Okay, that is a bunch of things, but notably it's simply channel resistance from the August high from August 2020. Okay, channel support nailed the low, channel resistance is 1860. All right, finally, let's take a look at S&Ps, and it's the same thing that we've always been looking at, which is this expanding diagonal. Every time we trade off of this, I feel like we're going to get a deeper pullback, and it just never happens. Anyway, next line, 42.50. Forex Good says, is SPY actually designed to only go up? Question mark. Yes. That answer is yes. Hold on here. Okay, let's look at this real quick. So NASDAQ, and we haven't looked at NASDAQ a whole lot in these webinars, but there is something here to take a look at. All right, so first of all, you'll notice the obvious. S&Ps are up here, and NASDAQ is nowhere near that, so we've got some sort of a non-confirmation going on right now. Here is a short-term pitchfork structure that is worth following. So you can see that the lows were right on this, right? And, the upper parallel is a wee bit higher in the NASDAQ index. So this is the futures, actually, NASDAQ 100 E-mini futures. So just interesting to note there, I don't know, 13,870 or so. But really, the only thing that you should care about right here is this little short-term trend line. If you break that, then you've actually got something to work with on the downside for the first time in a long time. Until then, who knows? And again, 42.50 is the next level in S&Ps. All right. All right, so if you have any questions, get them in, and I will just throw out the reminder one last time that we are looking for Scandinavian capital markets here in Stockholm. We are looking for profitable money managers. We've got clients that have money to invest in strategies, and if you are a profitable trader and would like to get into managing money, then come let us know. We can fund your strategies with up to $2 million. Register at scandinavianmarkets.com/fundmytrades. Again, Scandinavian Markets tradingview.com/fundmytrades. All right. Before we wrap up, I do want to remind, hold on here, where were we? That we did have if I go to a weekly chart here, this is always good. Let's not forget that we had huge reversals back in February, okay? My point being, like, this is Aussie dollar, okay? And we had, oops, we had it at a big resistance level, okay? So it's easy to like look at an hourly chart and be like, oh man, we're breaking out. Well, you are, you know, on a near-term basis, but be careful because it could be some sort of a trap. And again, that's what a lot of the volume signals that I developed and used are based on. It's based on identifying traps and false moves and stuff like that. But yeah, we laid out the levels earlier in this webinar that we'd be paying attention to for, you know, for possible dollar support, which again, it's all a little bit higher. So we'll see next week. But as always, I will be following these things and updates every day. And that's about it. So have a safe and wonderful weekend, everybody. And I'll talk to you next week. All right. Take care. Bye.